Okay, folks. Morning. This is Mark De La Paz from FX Instructor. Welcome to this ECB interest rate decision class. Now, I know we're here to talk about the ECB, but let me just point some things out. We don't expect to get any change in policy from the ECB. After €1 trillion of LTRO from over the last 5 months, the Eurozone now has the money, the liquidity that they needed for refinancing purposes. Okay? So, as far as this ECB meeting is concerned, I tend to think that you're not going to get any rate action. You're not going to get any commitment for LTRO. After printing €1 trillion, the more likely scenario or the more likely move by the ECB today is to say, we've printed a lot of money. It's time. We've even cut interest rates since Mario Draghi took over. It's time to see if the desired results of those previous action is filtering into the rest of the economy. Now, that said, there is one issue that we have to consider, that we have to be aware of. What is this? Well, a problem for Mario Draghi is the Germans. Okay? Let me show you something. The ECB was able to cut interest rates before, was able to print money because we had the inflation data showing that it was topping off. We had inflation at what's this? We had inflation before at 3% in October, November, December, but in January it went down 2.7, and then it went down to 2.6 in February. But what happened? Last time around, we saw that CPI data picking up. And you know what that means. Okay, give me a sec, guys. I'll just clear my throat. You know what that means. If CPI is picking up, then the Germans will be complaining. Remember that in the Eurozone, interest rates should be, or rather inflation, should be maintained at 2% below, at 2% or below 2%. That is the inflation target of the ECB. And if you look at the job of the ECB according to its charter, the ECB's main job is to keep inflation below 2%. And with an uptick like this, that could get, or in fact, that not could get, but that is actually resulting to complaints from Bundesbank officials, from officials from the German central bank. And what does that mean? It means that at the moment, Mario Draghi will be keeping a close eye on inflation. Mario Draghi's problems now is he needs to be sure that the recovery in the Eurozone continues. He's already provided the liquidity to do that. And yet, if this thing begins to take up some more, if CPI were to shoot to 3% or beyond once more, Mario Draghi would be forced to consider what Trichet has been doing before. Mario Draghi would actually be forced to consider the possibility of tightening. And that could be a big problem for the Eurozone. So essentially what I'm saying here is this. As far as the ECB meeting today is concerned, do not expect to get a rate cut. Do not expect to hear about more refinancing, more LTROs. But during the press conference, listen and see if the questions about inflation would elicit some form of comment, some form of response from Mario Draghi. What are the potential comments from Mario Draghi? That he would wait for the next inflation data. If Mario Draghi were to say, okay, if inflation picks up some more, then he might consider withdrawing the monetary stimulus. What does that mean? He might consider, he can't do anything about LTRO because LTRO has the fixed term. That additional billion euros will be there for the next 3 years. But he might consider raising interest rates. And that's exactly the wrong policy to do when you're trying to revive economic growth. Remember, if we look at the data that we saw today, Eurozone retail sales contracted. Okay? In order to encourage businesses to put up facilities, in order to encourage people to spend, buy something, you're going to need to have a good economy. And although the elements for coming up with one is there, the availability of cheap money, a rise in inflation will force the ECB to probably shorten the availability, the time span in where free money would be available. And that is the problem. Now, how are we supposed to react to CPI data? Let's put it this way. People, especially dealing rooms, are more used to thinking that any increase in inflation would warrant an increase in interest rates. So among the potential responses would be, if Mario Draghi focuses on talking about inflation later, you might actually get the euro picking up. Now, this is really a big conflicting scenario, conflicting picture for me, because personally, technically, I view the euro as a weak currency. Whether you talk technicals or you talk fundamentals. The only guys who think that it would pick up would be those who play interest rates, those who rely on a potential increase in interest rate should CPI pick up. So if Mario Draghi talks about inflation is a problem, we might see the euro picking up. But for me, let's take advantage of any uptick in euro and see whether we can join the bear side of the market on such a move. So guys, let me take a look at the charts now. By the way, if you have any questions on anything, feel free to raise them. And let me start with a big picture view of the euro. I know those of you who attended my earlier class would have heard this already, but that's really the big picture. What can I say? It's the main view right now. And what's the main view for the euro? Well, for me, we've got a head and shoulder in our daily charts. Well-defined, well-formed head and shoulder. And we are forming the right shoulder of that head and shoulder. What else? We've also triggered a double top in the daily charts to form that right shoulder of your broad head and shoulder here. Now, let me just check on something. Just how attractive, how profitable could that head and shoulder be? The high for that head and shoulder is right around, what's this? 34.85. The neckline for the head and shoulder is around 29.85. So we could be talking about a 500 pips sell-off if indeed that broad head and shoulder that took how many months, almost 2 months to form, were to be triggered. So that is something to watch out for, to look for, potentially triggering this pattern. Now, let's take a closer look of what's going on. So we have triggered a double top yesterday. We are currently seeing a follow-through sell-off. Well, Suleiman, I don't know if why they were still talking about QE3 last week. We've had we have a back-to-back strong jobs numbers from the U.S. already. So I think that finally everyone's agreed that it's unlikely that a QE would be happening. Okay, I guess those guys were really just hoping for more money to push the stock market up. Who knows? Maybe they were equity market analysts. And certainly, if someone is a stock market analyst or someone is involved in the stock market, quantitative easing is something that they would like to happen. Or maybe they were talking for their clients, convince the clients, buy stocks now while it's cheap. You've got more money coming from the Fed. Who knows? They're probably sell-side analysts trying to sell that idea. By the way, let me get back to our euro. So euro, we triggered a double top in our daily picture. We find ourselves with a confluence of bears, sell signals in the daily indicators. We managed to breeze through our EMA lines. 4 hours, more confluence of bears. Hourly picture, more confluence of bears. All right, here's the problem that I see here. Everyone seems to have sold our euro already. Much as I would like to say, let's sell it, I'm always worried when all the time frames that I look at, all the important time frames for me, daily, 4-hour picture, and the hourly is telling me the same thing. That tells me that I may be joining at the last down leg of this bear market. But let's take a look at support and resistances. We triggered a double top yesterday. Price target of that double top is your 31.18 region. Okay. What's the average daily range for your euro? Well, I've got average daily range for euro at 106 pips. We have today's high at 32.33. So far, the low for today is at 31.41. So we've had 92. We are slightly below average daily ranges. After a day where we have a sell-off in the stock market, where we have bad data from the Eurozone, I would expect that this is one of those days where you move beyond average ranges. So I'm thinking we can go beyond 106, which means that we should be looking for a sell-off towards at least 31.27 average daily ranges. Our double top target is 31.18. So let's view that as our reasonable objective for today's bear market, 31.18. Over the next few days, what we really want to do is get to the neckline of our head and shoulder. So that means that if you're someone who can hold on to a position for a couple of days, you might want to look at 3041 as your target. The head and shoulders neckline. All right. So how are we supposed to join the bear side of the market? Can we jump short on any breakout? Because we are near average ranges, I don't really like chasing the breakout anymore. It would have been fine if you sold at the break of 3187. That's actually where I'm from, just below that support level. Now, the idea for me is, can I get a bit of a technical correction? Maybe I see prices bouncing towards your 3187 region. From there, it would certainly be a good place to look for a short. What else? Otherwise, guys, if you plan on shorting on a new low, just be sure to use a tight stop and to have a very disciplined limited target. Since average ranges suggest that you can get 3127, a break of the low should have a limited target. That limited target, average daily range, your 3127 price point. So it doesn't sound like it's a smart idea or it's an attractive notion. You're talking about trying to get another 18 pips out of the market. That's not exactly a very attractive proposition. So guys, as far as Sri, will it touch 32? Well, if it's going to happen, it will probably happen around the open of the US market. Yeah, around the close of Europe, technical correction and all that. And I will look at it as a place to sell again. But frankly, I don't think that we are in a position to do that. 3187 to me is a strong resistance level, so I'd probably be limited to that price point. So I don't really think that we'll get 3200 exactly, but a pullback to that region, a pullback to 3188 is something that I'm still hopeful for. Well, I don't think that it will have any effect. We should have that interest rate decision in about, what's this? About 11 minutes. If we end up with Mr. Draghi really focused on interest rate issues later or inflation issues later, then in the press conference, then any technical correction that we get, I would view as an opportunity to get better vantage point from which to sell the market. I'm still looking at this as a bear market. Unless suddenly Mario Draghi says, I will raise interest rates, or we get a sudden rate hike, which is something that is not going to do. A rate hike by the ECB this early after cutting rates only last quarter will just damage the reputation of the ECB. In fact, even if you get a rate hike, say as late as June, a rate hike in June would still be damaging to the image of the ECB. So he's not likely to raise rates, but he's going to talk about being ready to do something about excess liquidity if needed. So nothing from the rate decision. Focus on the press conference. If he starts talking about inflation and the ability of the ECB to do something about it, any bounce up in the euro, we will quash, we will short at, coming from a good resistance area. Oh, Pizzazz. Well, let's take a look at GU. there are some differences between the GU and the Eurozone. Lately, the numbers that we have been getting out of the UK has been impressive. Okay? Economic data from the UK has been impressive lately. Case in point, today's releases. We actually saw your SIP services index at 53.3, better than consensus forecast, while that of the Eurozones was still negative. If you look at the ISM last Monday, we also saw the same thing. Your manufacturing PMI in the UK was at 52.1. The Eurozones, 47.7, in line with consensus forecast. So, there is that difference in policy between the two. And because of it, I have my doubts about just how bearish GU can get. Let's talk about the GU chart. It's one of the most frustrating charts for me right now. Why do I call it that? It's frustrating because every time you think that, hey, finally I have a sell-off going, you end up bouncing. So let's take a look at that chart. And what do you have? You had that nice big bear candle yesterday. You're trying to generate a follow-through sell-off today. Look at what GU's done before. We sold off, bounced off the EMA lines. Sold off, bounced off the EMA lines. And that is my main concern here. We may have nice sell signals right now, but we actually had them before when we saw that bounce off the EMA lines. What else? We also have this chart to consider. Okay, let me just drag it. We have Euro-Pound selling off. And when EUR-GBP is dropping, what is its implication? A decline in EUR-GBP means that your GU is getting stronger against the Euro. It has a supportive impact in your Euro. In your GU. Okay, if Euro-Pound drops, it will have its impact in GU is to act as a support in GU. So much as I would love to say, yep, that GU is going to give you another big sell-off following yesterday's drop, my advice is be wary. Now let us view the intraday setup. Are we bullish? Are we bearish? What are we getting? For our picture, we are bearish still. MACD's down. Stochastics oversold. Hourly levels, a mixed view. Okay. Where are we with respect to support and resistances? Look at how stingy your GU is. You sold off, and then in the next hour you ended up with a pushback inside the candle. You ended up with another indecision spinning top, well, not exactly a spinning top, but another bodied candle. So as far as GU is concerned, to me, if you want to do something, it's actually a potential buy and hold, rather than something that can be shorted. Excuse me. Alright folks, let's get back to overview. If there's any particular chart that you'd like us to discuss, again, feel free to tell me about it. But as far as our, oh, by the way, we're about 3 minutes away from the interest rate decision. Again, we don't expect to see anything. We don't expect a rate hike. We don't expect a rate cut. There's pressure from both sides. You've got the Germans really looking for a rate hike, and you've got the periphery wanting even more liquidity. You got the periphery asking for more liquidity and a cut. What will we get? It's likely to be no one will be happy, no one will get their way. We will get an as-is decision. So we're about 2 minutes away from our release. In case you have a surprise, say there was a rate cut, what are we supposed to do? If all of a sudden you hear a rate cut, then that would mean a further decline in your euro, in your GU, in your euro yen. Just short them. All right, folks. So less than 2 minutes away from this release. Again, we don't expect to get anything. We don't expect to get surprises. But just in case, a cut means continue your bear market, extend the sell-off in euro, euro pound, euro yen. A surprise hike. And as I said, there's equal pressure for both sides. A surprise hike would also mean the opposite. You suddenly buy your euro, your euro yen on such a move. Well, Ari, that's the more likely scenario. The rate will stay the same. And that means don't do anything. If the rate stays the same, the move would be to wait for the press conference. And again, in the press conference, we will listen for just how focused Mario Draghi is on the inflation question. All right, folks. So we should have that rate decision by now. And of course, we're not seeing any movement. So that means we have as expected, unchanged. Edward, well, let's put it this way. Inflation has been picking up. Again, let me bring out that chart. When Mario Draghi came in, he anticipated that inflation would drop. Remember, he cut interest rates even though CPI was at 3%. He was saying that that CPI number will drop on its own accord even if I cut interest rates. And he did cut interest rates. And your CPI did continue to pull back from that 3% high. Unfortunately, last time we had a CPI data, instead of another lower figure, we suddenly pushed up. And that has the Germans complaining. Remember that the main job of the ECB is to control inflation, nothing more. Okay, the primary task of the ECB is to make sure there is price stability, make sure that there's no inflation. So this uptick in your CPI could be a problem. If this is followed by another push up, then Mario Draghi's would be in trouble. Okay, his policies are geared to providing liquidity. His policy is designed to provide people with money. And that kind of policy encourages inflation to set in. So if that would be the case, if Mario Draghi exhibits concern that inflation would be high, then it would suggest that the period where LTRO will be available might be adjusted lower, or more than likely we will end up with calls from the Bundesbank to raise interest rates which would damage the credibility of the eurozone. In either case, any increase in inflation, as far as we traders are concerned, would probably lead to an uptick in your euro, and any uptick, any pullback, any bounce that I get based on concerns of inflation by Mario Draghi, I would take advantage of, looking for a new short for any bounce that we get. Okay, questions, comments, concerns, guys? So as far as that rate decision is concerned, we have it. As far as the press conference is concerned, listen for inflation. Yep, we are still in the right shoulder of that euro, and that right shoulder remains valid for me. The only way to invalidate this head and shoulder pattern would be if you have prices actually pushing past the head. So if you see your euro above 34.85, then that invalidates the pattern. But for now, the pattern is valid, and not only valid, but it's also looking good. Well, I've got our swing highs for the year at what's this? 134.40. Sorry, let me take a look at that again. 134.86. Sorry, I have it at 134.86. So the head and shoulder pattern gets invalidated only if we push near that 134.86 area. So for now, intraday type traders, our focus is get better pricing from the press conference. Maybe volatility out of the press conference would give us at least 31.87. I'd actually would want to initiate a new sell coming from that price point. Excuse me. Okay, let me just take a peek on something. Euro Swiss. Not that it's something that we expect to move. Looks getting attractive. But the ranges are just too tight for us to do anything. Soliman, well, the rate decision has certainly been a non-event already. The question now is, what kind of questions will be the focus on in the press conference? We've been like that the last year or so. Focus on the following press conference, because normally the Eurozone is quite good at predicting its needs. All right, guys. Let me just take a quick peek at Euro Pound. Looks like we've got new lows. We are actually fast approaching our strong support at 82.78 in EUR GBP. And from the looks of it, we have the potential to actually take out that 8278 area. You have a new bear cross happening in your daily MACD and stochastic oversold. Oversold hourlies. Let me see. Heading back to oversold territory. So really just underscoring the weakness of the euro. All right, guys. Questions, comments, and complaints at this point. So more riskier than Aussie. How do you define riskier, Soleiman? I actually look at it. Oh, volatile. Well, I'd agree with you on that one. Okay, folks. So comments, questions, complaints. So in about 35 minutes time, we will be getting the press conference. Again, as far as the press conference is concerned, if the question of inflation crops up and there's a lot of discussion on it, then that to us is our sign for potential technical correction, potential pullback in your euro. But any pullback, any bounce that we get, we ask the question, are we near a strong resistance level? And then look for a rejection. All right, guys. Any questions at all? Any chart you'd like us to examine? So it looks like as we approach that press conference, some people are actually getting out of the market. Silver. Alrighty, let's see what's up with silver. Gold, let me see silver. Well, Anil, it's a frustrating chart for one. We are currently hitting our congestion floor, so that might be a problem. Let me just see this very short time frames. Confluence of bears in the 4-hour picture. Hourlies also, hourlies are looking mixed. But here's the important thing. You've got silver right around the previous low. You seem to be bouncing. That's a strong support level at 3162. So I may have sell signals in the daily chart. I may have sell signals in the 4-hour picture, but as long as I'm above that strong support, I won't be selling it. Not when you're just 28 points away. Rather, what I would like to do is this. See if I can get more of these hammers develop in our bearish hourly candles. And if I see myself just above 3162, with these hammers, I'll be able to look for a bounce up. So, silver overall is in a congestion. If we draw fibs on our previous upswing, we are at the 50 fib retracement area. reinforcing the notion of being well supported. We don't have enough bullish bias from the higher time frames to expect a sustained bounce up. So as far as this goes, I would say just play the congestion, look for buys above 31.62, use a tight stop, and then just get out whenever you see the 33.16 price point. So anything else, guys? So again, silver is well supported. We've got no reason to expect any bearish breakout. Weekly chart, downtrend channel. Okay, I think we're running out of time, so I'll do a quick one. Oh man, I'm having a hard time. There we go. Well, we seem to have a nice bearish channel. And if you look at this as your channel, I'm using Fibonacci channels, by the way. We are right around the 61.8 fib line of that bear channel. So it may be difficult to get that further sell-off from here. Technically, if you follow fib channels, you should be expecting a bit of a bounce from this area before the next move. Okay, guys, I've run out of time. Thanks for joining the class, and see you next week.